Hello everyone, Clifford Bennett, Chief Economist, ACY Securities, and it's a very exciting day. Well, we're way down here in Sydney, but way over there in the US, Jackson Hole is getting at the meeting. Big meeting, conference is already underway, but Chairman Powell, the Chairman of the Federal Reserve, is due to speak, and the whole market is focused on that and what it might mean. I think it's going to be, and we've seen this in markets a lot lately, again and again with various issues, that when there's a big build-up for something, people have been trading buy the rumor, sell the fact, or sell the rumor, buy the fact. So I expect to see a lot more of that kind of market positioning and market trading behavior on the day. It almost doesn't matter what he says at all. People will just go, that pressure is out of the way, relief rally. That will be the mindset of most traders. But I've got this hunch that there are some very large fund managers and wealthy investors out there who really just are over this whole thing, this very difficult equity market this year. They've just seen property prices for the first time in a few years actually go down in the United States. So the Black Knight Private Sector Survey showed that property prices in the US fell 0.7% in the last month. It's not a big number, but it's the first time that's happened for a couple of years now. So it's an interesting possible tipping point for the US property market. As you know already, I think the US property market is in the midst of its second great bubble of this century, the GFC being the first bubble. This bubble's about to burst. No one's talking about it. If I'm correct on this, and remember I was talking about a US recession when everyone thought it was for this year, when everyone thought that idea was nuts about a year ago, we've already got a US recession. I'm now thinking if the property market turns south, and I've been warning of this property bubble for some time, then the US consumer and business owner will be hit with basically losses on their equity portfolio, losses on their property portfolio, higher inflation, higher energy, food prices, which are not easy to avoid. It's not like it's a broad-based inflation. The fact that inflation is in those two sectors makes it very hard for the consumer to avoid, and therefore it has greater than usual impact on their behavior. If they then see their home properties going down, their investment portfolio going down, their stock market investments going down, you're going to see a very immediate and sudden total retrenchment. Remember, retail sales were flat last month. A total pullback by the consumer and small businesses too. Why go out and buy those new fleet of trucks if you're not too sure actually is the economy tanking here, which is what people are increasingly recognizing to be the case. And this is just the US story. So that's the background to Jerome Powell speaking at Jackson Hole today. I think he's actually going to be saying that he's a very caring federal chairman, and he's aware of, some people could experience some economic pain as a result of the Fed hikes. But nevertheless, these are extreme levels for inflation, and the Federal Reserve absolutely has to fight inflation, otherwise everything will unravel. It's kind of like that's the first building block to put in place before they can address the myriad of other issues now confronting the US economy. We do not have a leadership situation in the US at the moment, the Senate, the White House, etc., that is conducive to very quick solutions to this economic slowdown. I think also a lot of people in the US have their heads in the sand about this one, so there aren't any upcoming policies to address this severe US economic slowdown. So regardless of what Jerome Powell says at Jackson Hole today, I think there's a very real chance the US could now, given that I was right on my US recession, it is a recession even though if it's not in an employment sector, and 2 quarters of negative growth, which everyone kind of wants to overlook as well. But I do think, and here it is, the punchline, I do think there is risk of a depression in the United States through 2023. Let's hope that doesn't happen, but be very aware in your investment decisions that that is a very real risk. And we haven't even begun to discuss the dark recession in Europe that is likely on energy rationing and the ongoing permanent slowdown in the Chinese situation. So overall, not a great environment to be long equities. I suggest, as I have all year, and correctly so, play defense. We got the last 6 weeks wrong, but we got the previous 6 months right. I think this is now turning down again for equities. US dollar could have a bit of a dip on the event, but in the next day or two, I would again be a buyer of the US dollar. I still think the trade that no one else has on their blotter, so to speak, is to buy oil. Watch that oil price. That continues to build. It's a great buy. Thank you very much. Have a great day wherever you are in the world. Clifford Bennett, Chief Economist, ACY Securities.